you make of the so-called scramble for African land?
Thank you very much. Indeed, as the World Bank report puts it, there are two sides to every coin, and the land acquisition in Africa by not only the investors from within Africa, but foreign companies or foreign governments in Africa has attracted a lot of attention. Now we're seeing interest from three particular sources. First of all, governments in especially Middle East looking at their food security initiatives. Secondly, institutional investors diversifying away from the equities market to more longer term investments such as in land, perhaps as an inflation hedge. And then lastly, we're looking at the previously small scale farmers within Africa also scaling up as a result of the attractiveness of the agriculture sector. Okay. So indeed a very topical issue.
And a very sensitive one, Dennis, but some people would say, why are we all up in arms about the so-called land grab when a lot of the land that's being bought and the deals are done are for land that hasn't been cultivated? Apparently that's our problem in Africa, is we're not utilizing the land that's available to optimum potential.
Correct. And the problem has been exacerbated by the fact that, public infrastructure development is very low in the rural areas, also compounded by the fact that land rights, indigenous land rights or customary land rights have not been enforced. But I think that the debate is more increased because a lot of the deals have been done in a way and manner in which people suggest there's lack of transparency. I think what the uproar is arising from is the fact that people would like to see a lot more openness and a lot more benefits, and even perhaps the methods of engagement with the people interested in acquisition of land in Africa, perhaps a more participatory approach. I think that is the reason. Much as the farming has been done in Africa in a more small-scale way, people are increasingly becoming aware of the value of agriculture, and also a number of government initiatives are geared towards that. I think it's the method of engagement with the host countries that is causing the uproar.
All right. Also, what's causing a bit of uproar and outrage is that a lot of the multinationals or the private equity investors that are doing the land deals are using the land to farm for their own food security. So in other words, they are exporting the food back to the home country to service the domestic needs there and not really helping to address Africa's food security issues.
Absolutely. And I think this is where the engagement methodology needs to change. There are a number of areas. Responsible agro-investing requires that there's attention paid towards the social implications, the environmental implications, and also engagement with the local partners. If you look at it, the large-scale commercial farmers or commercial investors into agriculture bring with them technology, they bring accessibility to markets, infrastructure development, but there needs to be a level of engagement with the actual farmland owners, and also there needs to be, they bring in local knowledge. And then government policy is very critical in this. To what extent is government policy directed towards attracting systematically the institutional investors in such a way that there's long-term sustained benefit both to the investors coming in and also to the countries themselves? So in this example, for instance, the need not only for agri production for export purposes, but also to enhance value to the agricultural products within Africa, to be able to meet the food security needs in Africa, and at the same time meet the export targets that are required, and food security for the investing community is also important. So I think this goes back to engagement methodology, which I mentioned about earlier.
Okay, Dennis, we've got a guest host here with us in Johannesburg. His name is Andrew Duvenage. Andrew, Dennis is also talking about a win-win for everybody, all right? And fundamentally stressing this need to commercialize farming. A lot of farming activities in Africa involve small-scale farmers. They're not producing large volumes. We're not exporting a phenomenal amount. We need to start being a little bit more clever about how we approach agriculture.
Yeah, and I think as Dennis quite correctly says, is there's a political issue to it as well, because while Gini coefficients across Africa tend to grow as you've got the haves and the have-nots, you have people who need access to this land but certainly don't have access to the finance, to the technology, to the markets to be able to do this on a commercial scale. And many failures that you've seen have been people who've been given this land but just not the resources and left to flounder. At the same time, the land is valuable enough, or that valuable for food security purposes, that this can't be allowed to happen. So you have to balance the needs of the people on the wrong end of the sort of Gini coefficient and the commercial aspect to it.
Okay, Dennis, let's talk about alternative funding models, because in some instances we're told that banks are only prepared to incur the risk of the land, not the actual farming activity. So if we start talking about commercializing farming enterprises in Africa, moving beyond the small scale to the economy of scale, the large scale operation, institutions are not prepared to bear that risk.
That's correct, and that is just a manifestation of a wider problem, whereby the public sector, the real sector of the economy, and the financial sector of the economy leave a gap in the middle. What we need is some level of private-public partnerships. We need bankable transactions in agriculture. We also need a methodology of engagement whereby, for instance, there's some level of south to south, and the same report, agricultural report produced by the World Bank, this is advocated. South to south kind of learning experience here. If you look at Malaysia, their methods the Malaysian farmers have used, whether it is contract farming, whether it is leasing methodology, this makes transactions bankable in such a way that the banks and other financial institutions can see the long-term benefits, the predictability of future cash flows, and also the potential of making significant amount of gains in the agriculture sector. But this sadly is not happening, even though we have seen that in Sudan alone, there's 4 million hectares of land being allocated to foreign farmers mostly, and in some places like Liberia, that is about 1.7 million hectares. In Ethiopia, about 1.2 million hectares. So there's huge potential here and long-term benefits, and it's of huge attraction to some long-term investors such as pension schemes. So I think increasingly the financial institutions need to take interest in this long-term agriculture investment.
Okay, we know that, for instance, in Nigeria, where you are operating right now, the CBN has been quite active and forthright in setting up an agricultural development fund. They've also set up a fund for entrepreneurs. They've also set up a fund for manufacturing concerns. These funds have seen support from the tier 1 banks that are going to administer the allocation and the raising of additional capital through bonds and the rest of it. So innovations are coming up in that regard. But then we hear nothing else in terms of how the money is disbursed, who's coming forward, interesting ideas and business proposals coming through from the farming economy. So the argument that I'm raising here is we could say the state is doing something. It's the uptake on the other end.
Correct, and that is what is missing. Like any other infrastructure investment, there are various parties that need to come together to make a transaction, fruitful. And we need to engage a lot more, and this is really for the private sector participation, banks, entrepreneurs, and other strategic investors in agriculture to match all the components together. On the one hand, the government has given a hand, a very supportive hand, and I must applaud the initiative by the central bank governor, particularly in driving this. And you then need to bring to that the technical experts in agriculture. You need to engage the farmers together. You need to look at the entire value chain of the agro-allied industry. We have seen the opportunities now in Nigeria, particularly for vertically integrated agriculture schemes, for instance, in chicken, in poultry farming, and other areas. I think the ball is now in the court of the private sector to seize the opportunity to engage with the banks and the public sector in bringing this to fruition.
Let's ask Andrew why the private sector doesn't see farming as very sexy, to put it bluntly.
I suppose in the South African context, I'm not sure if Africa-wide, but in the South African context, I think a lack of clarity around policy, once again, is something that scares investors. It's not a clean-cut sort of case that they can go into, but despite that, there are some counters on the JSE that have done relatively well, but you haven't seen a full-scale venture into it, and I think it's around policy and just clarity around it. Is where is it going from a government perspective?
Okay, what we have seen though is some private equity funds being set up to pursue agricultural concerns as far afield as East Africa, because those are agrarian and agricultural economies and large exporters. But we're not seeing the money coming through into some parts of Southern Africa, and certainly not in West Africa. Everybody's chasing the mineral resources, for instance. What needs to change for a paradigm shift to occur?
Well, I think it will change as food security becomes a bigger and bigger issue. Ultimately, that and water security will one day be the big issues. So maybe the easy money is to be made inside the mineral sector at the moment, but ultimately it has to be an area of focus. But once again, I don't think the uptake's there just yet.
Okay, and then let's talk about other issues. I'm going to turn you into a bit of a farmer now, Dennis Aliga. One of the concerns about these big multinationals coming into Africa and buying up the land is what it's going to do to crop yields and contaminating the indigenous crop, because they're servicing a foreign and an international consumer base that doesn't necessarily eat the staples that we eat in Africa. There is a fear that it's going to lead to a bit of corrosion.
Correct, and the interest, the farmers or the strategic investors from elsewhere coming to Africa is very specific. We have seen, for instance, in the Middle East, there's emphasis on sugarcane, there's emphasis on rice, there's emphasis on beans, and increasingly as well from South Korea, we're going to see a lot of interest in jatropha and some kind of biofuels. Now, in a situation where attention has traditionally in Africa been paid to cash crop farming, this is going to require a paradigm shift. And again, this suggests that you cannot have large-scale commercial agriculture alone. That needs to coexist side by side with small growers to meet the domestic requirements and also to revolutionize that sector. Put a bit more money, infrastructure development, engage with the farmers, and again it goes back to what we said earlier on, to see the private sector participation in line with the farmers, and to get some of these policy implementation issues addressed in a more coherent and sustainable manner. If this does not happen, the long-term effect, I think, is apparent. We have seen it in some countries in Africa where the indigenous population looks at the large-scale commercial farmers as a negative force. Meanwhile, there's a potential for the two to coexist alongside each other and to feed upon each other as well.